Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
Huh.
People who know BDO.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. It's starting to sound like a broken record, but one you want to hear. Another new high for the markets. But will the Fed pull away the punch bowl? Will Washington get in the way? And is it too late to get in? Then it's no Mickey Mouse operation. My conversation with Disney CEO Bob Iger about why nobody can beat the Wiz, the company's digital strategy, and what's happening with Star Wars. Are they going to reunite? Plus, spring is in the air. It is almost time for baseball. We'll talk to a former Wall Street trader who says trading, math, and figuring out the outcome of baseball games aren't too far apart. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. The Federal Reserve released the second round of the stress tests on America's largest banks this week. The banks are asking to return capital to shareholders in the forms of dividends and share repurchases, which the Fed must approve. Now, the Federal Reserve accepted the plans of Citigroup, Bank of America, Morgan Stanley, and Wells Fargo. While Goldman Sachs and JP Morgan's were conditionally accepted, they have to revise their ask and go back for the third quarter. Ally and BB&T's plans, meanwhile, were rejected. The Fed saying those banks did not have enough of a cushion in reserves should there be a severe economic downturn. Former FDIC Chairman Sheila Bair telling me this week the stress tests are very useful, even if they are not perfect.
One of the positive things about these stress tests is we are getting more information out about what's on their balance sheet and what the impact of the losses could be in very stressed scenarios. But, you know, it's an imperfect process and one that's evolving. We are in much better shape. We still have a ways to go, but we're in much better shape than Europe. And I would take our banking system over Europe's any day of the week right now.
Meanwhile, it is starting to sound the same, but in a good way. By Thursday of last week, the Dow had notched a 10-day winning streak, the longest streak since 1996, and each day up set a new all-time high. Treasury Secretary Jack Lew, meanwhile, says he doesn't think the markets are in a bubble right now and that the economy is recovering.
We still have a lot of work to do, but there doesn't seem to be any push to create a crisis over the debt limit or over shutting down the government. I think that's helpful. You know, we've had economic data come out for quite a while now, showing that we have a resilient economy that's growing.
Retail sales were growing. They came in better than expected for the month of February, rising 1.1%, the best number since September. Analysts were concerned about the impact of gasoline prices and that increase in the payroll tax for us, but consumers are still spending money. Important because that makes up about 70% of America's economic growth. And if you're looking for something new to buy, Samsung will be happy to oblige, introducing its new Galaxy 4 smartphone this week. The phone features a 5-inch screen, a larger battery, and a screen that you don't have to touch, but just hover your fingers over. Samsung is Apple's main competition in the smartphone market. Well, with the market setting new records almost every day and the Federal Reserve meeting next week, what could happen next and what should you do with your money? Joining me right now to talk about that, Randy Kroszner is the former Federal Reserve governor and current professor at the University of Chicago Booth School of Business. And Jim McCaughan is CEO of Principal Global Investors with $280 billion in assets under management. Gentlemen, it's good to have you on the program. Thanks so much for joining us.
Sure.
So many stories to talk about. Jim, every time the Dow sets a new high, it's a new record. We've known corporate America is strong, sitting on all of this cash. But is this telling us now that the economy is stronger than we think, or is this just because the Federal Reserve has created an environment where there just are very few alternatives to owning U.S. stocks?
I believe the reason that the stock market has been pretty strong this year, and as you say, Maria, been hitting new highs, is that the U.S. private sector and the corporate sector in particular is in really good shape. The factors I would point to are that here in the United States, we have, by global standards, cheap and plentiful energy, both oil and natural gas, that we have innovation and productivity. The economy is currently producing at an all-time high level in terms of GDP, but with about 4 million, 5 million less people employed than before the recession. So the productivity and innovation in the U.S. economy have been very strong.
So are you putting new money to work then, Jim? How are you allocating capital with all of this?
I think the key point in equities is to have a plan, have a long-term allocation. You should be up to weight in U.S. equities. If you're not, you should be moving up. I think that the preference for bonds that many investors showed over the last 3 years will no longer be rewarding because rates can go up as the economy improves. We've already seen that so far in 2013.
Randy, let's talk about the Fed and all the other stories. Of course, the Federal Reserve meeting next week. What do you expect them to do, to say? We know that they've pledged to keep interest rates low through 2015. Do you think they'll do it, or do you think they should start winding back the quantitative easing or that QE3 sooner?
Well, we've had some more positive job numbers, but one good job number doesn't a new forecast make or a new Fed policy make. The Fed's seen this story before, unfortunately. We had false dawns in recovery in the labor market in 2009 and in 2010. The Fed pulled back a little bit in each of those periods, and then the labor market faded once again. I think they're going to be really loath to make that mistake once again. I think they're going to continue on the policy that they have.
Randy, let me get your take on the other big story of the week. And of course, the Federal Reserve released the second part of the results of the so-called bank stress test this week, testing major banks' ability to return capital, testing their ability to handle a much worse economic situation and economic downturn. What did the results tell you that we heard from the Federal Reserve this week?
Well, the banking system is in a much stronger shape than when I was there during the crisis. If you look at each of the criteria that they have, how much basic core capital they have, core equity capital, because the reason that's so important is because if a financial institution is facing losses, that's the loss-absorbing piece. And so if you have 5 or 6% core equity capital, you can sustain 5 or 6% losses and still survive. In the old days, unfortunately, the capital ratios were much lower, and certainly in the crisis, dramatically lower. So they're about double in many cases where they were. So we're by no means in a situation where we will never have a crisis or never have any problems. We can always have problems. But we're in a much better situation to be able to absorb shocks and losses than we were before.
Jim, what do you think about the banks? Would you buy the bank stocks here, Jim, or do you think they've had too big of a run-up? I mean, does this market have more room to run?
Yeah, I think the market has more room to run, but I don't think bank stocks are particularly attractive. I think the problem with bank stocks, as Randy described, the banks are much safer. They've got a lot more capital. That means they have less potential to drive up their return on equity. So I would not be a particular buyer of bank stocks at this point.
Randy, let me ask you about the economy and sort
Sure.
of propping it up, because the Fed has really carried the burden of propping up this economy. Little help from the fiscal side, we know that. This week, we saw both Paul Ryan and the Senate Democrats introduce their budgets, both likely dead on arrival. But at the same time, the president met with House Republicans. Want to get your take on what John Boehner said after that meeting. Listen to this.
Okay.
I thought that we had a very frank and candid exchange of ideas. And frankly, I think it was productive. We know, however, that there are some very real differences between our two parties, like issues, jobs, balancing the budget, and what do we do to get our economy moving again?
Randy, do you think there's any common ground here? Will we ever see a compromise between the two sides?
Well, whenever I hear the phrase frank and candid, I know that means that we completely disagreed, but at least we had a discussion, and I think that's a positive. I think it's very positive that both sides have now put down markers for what they think is important. I agree with you that both of those are going to be dead on arrival, but that doesn't mean that that's not going to lead to now some sort of discussions, negotiations. Before, it was just very, very vague about, one side likes this, one side doesn't like that. Now there's something concrete to negotiate from, and so we can potentially make progress from here.
Jim, it's interesting that the markets don't even care about what's going on in Washington. They're ignoring the sequestration, the budget's being introduced. Doesn't matter?
Yeah, it matters, Maria, but right now I think the markets believe that Washington is so bogged down that it can't do any more harm, that the sequestration what it really is in market terms is a bit of fiscal tightening at a point when that's not a bad thing.
Gentlemen, great conversation. We appreciate you joining us today. Thank you.
Thank you.
Great to be with you.
My thanks to Randy Krasner and Jim McColgan joining us. Up next on The Money, we will walk down the yellow brick road with Disney Chairman and CEO Bob Iger. What he says about Mickey Mouse, Disney's digital future, Star Wars, and his business. And then finally, signs of spring. Spring training underway. We're not playing around when it comes to the big leagues, big data. What connecting the S&P to MLB taught one former Wall Streeter about life, money, and value. As we take a break, take a look at how the stock market ended the week. Great and Powerful Oz is proving to be a great and powerful movie for Disney, the film with an $80 million opening weekend. But the house that Mouse built has a lot up its sleeves besides that, including the reintroduction of a favorite character, big news on Star Wars, and a digital future. I spoke to Chairman and CEO Bob Iger about building buzz with this latest hit movie.
Well, you hope that it does, yes. In today's world, word of mouth is a big deal. People hearing that a movie is a success is a great thing. You also want them to like it. That's very important too, but a weekend like that is a great thing.
Can we assume this will be another franchise that eventually includes Dorothy, a sequel?
Too soon to tell.
Too soon to tell. Let me ask you about another sequel and sort of such a popular theme, and that is Star Wars. A lot of talk around Star Wars, particularly the old cast, Harrison Ford, Mark Hamill, Carrie Fisher. Are they going to reunite in the next?
Well, George Lucas was quoted as saying that they would, but we haven't made any official announcement yet. We've got a team working on the film right now. J.J. Abrams is going to direct it. We've got a writer named Michael Arndt who's actually writing the script, working with some of the folks that were involved in some of the earlier films. And when the story is quote-unquote broken, then we'll make decisions about the cast and we'll move from there.
So what can you tell us about what's going on now in terms of advertising, in terms of the business climate? I guess the upfront period is beginning for some parts of media this week. Do you have any vision that you could talk to us about in terms of advertising? How does the year look?
We don't have a lot of visibility. It's been that kind of a market for a long time. I will say that the year has been fairly good. There's a fair amount of demand from advertisers for advertising time, and is certainly a good sign. We've seen that as fairly steady, at least since the beginning of the year, and that's pretty good for us, obviously.
And the parks business?
Parks business, the same. Also stronger than it was a year ago. Steady improvement means that more people are coming, and our pricing is holding up nicely as well. Actually, our pricing has increased nicely, so it's quite strong domestically.
And so much talk about worries over the economy, about the sequester. And you sit on the President's Export Council. What went on in your meeting today? What can you tell us?
Well, the President established a council that's made up of a number of folks from different businesses, including small businesses as well as large businesses. And the goal was basically to see what we could do as a group to improve the country's ability to export, because obviously as we do that, we'll create more jobs and help this economy. And there's been a fair amount of progress made. I will say that the group has not only had a good dialogue, but has served up a number of really good ideas to the administration that, if they get behind, can really end up stimulating the economy and creating jobs. I'll give you one. We talked a lot about travel and tourism to the United States. The more people that travel to the U.S., the better it is for the U.S. economy. So as a for instance, we talked about our visa policy. If we can do things to better facilitate people getting visas in different markets, then they will travel more. And we're seeing much greater demand from markets like Brazil, India, Russia, China to travel to the U.S. If we make it easier for them to do that, then more people will come. And so the President got behind this initiative wholeheartedly. They invested in the visa process in Brazil, opening up more visa offices. More people are coming, particularly to Florida, which we've seen and we benefit from, but so does the U.S. economy.
Bob, where does the growth come from at Disney the coming 3 years?
Well, in our case, obviously it starts with creating great intellectual property and experiences, and then leveraging that across multiple platforms in multiple territories. We benefit from technology making this great intellectual property available to more people, more often, more places. So the new platforms that we see, mobile platforms, one example of that, a great opportunity for the creators of intellectual property to reach people in new ways. Also, we see great growth in basically the new franchises that we've bought or we've created. from Pixar to Marvel to Star Wars, and of course outside the United States. We're seeing continued opportunity or growth and opportunity in the emerging world.
Let me wrap up on Mickey, America's favorite character here. He'll be starring in a new series of short films that will begin rolling out in late June on the Disney Channel.
We're announcing the creation of 19 new Mickey Mouse shorts. Walt Disney created the original Mickey Mouse shorts starting in 1928. The first to be released was called Steamboat Willie. And they depicted Mickey as an impish, yet innocent character, kind of an everyman of sorts, but someone that liked to have a lot of fun and someone I think that just entertained people, not just in the U.S., because he's probably the most popular character globally. And over time, we thought that Mickey maybe lost some of those great impish or innocent qualities, that vitality that people once saw in him. And so we decided to bring him back, not that he has really truly gone away, but hearkening back to what Walt did with a collection of new shorts that depict him in the ways that we thought people loved the most.
My thanks to Bob Iger. Up next, we're on the money. It is springtime, and a young man's fancy is turning to thoughts of baseball. Stock trading. Meet the former Lehman Brothers trader who found dividends in diamonds. Can attention to the details of our national pastime bring around a gambling grand slam? My next guest used baseball to beat Vegas at its own game. Joe Pita was a Wall Street trader who turned what he knew about stocks to sports. A story he tells in Trading Bases, a story about Wall Street, gambling, and baseball. Joe, good to have you on the program.
Thanks, Maria. It's a pleasure to be here.
Thank you so much for joining us. So you made quite a career as a Wall Street trader. How did you, or what made you start trading baseball for stocks?
2 years ago, I was starting my 15th year as a trader on Wall Street, and I had worked for big investment banks, including Lehman Brothers, for 13 of those years. And I figured that was going to be my career for a lot longer, and I was crossing the street on foot in Manhattan, and I got run over by an ambulance. And the resulting leg injury laid me up. It curtailed my ability to work. And worse than that, I was in a wheelchair, and I was stranded across the country from my family. So stuck in New York, I needed something to take my mind off my inactivity and my boredom and my pain, and I really turned I threw myself into the baseball season. Amazing.
You really turned something that could have been quite horrible into something good. So what did you do when you turned your attention to the baseball season?
Well, I started looking at baseball that spring sort of through this sabermetric lens, which, as we know from Moneyball, now has somewhat of recognition as being this study of baseball statistics. I realized these were very similar to the bottoms-up models we created as traders to value stocks, and I started thinking like a trader. Well, if I found a stock that was over or undervalued, I know that I would sell or buy it, and so I started thinking, why don't I apply that same logic to baseball?
Fascinating. So what's the biggest indicator or data point you think that you look at for the talent on any given baseball team?
Look at the data and try to distinguish between past results and the actual skill sets of the players that produce those results. And in some cases, if they diverge, generally the value of a team in terms of how Las Vegas is going to value them is going to be based on past results, not necessarily on the skill sets of the underlying players, which is more indicative of future results. Similar to stocks. Look, there are stocks that get overly popular and get ahead of their fundamentals, and they may become candidates to sell, even though they're good stocks, but they're just overvalued.
So these are the same principles that you can look at when investing, when hiring people?
Well, certainly, I think so. And I think that also the lesson is, as I really dove into baseball, what I found was it's interesting that even though Major League Baseball as an industry is worth just a fraction of the financial industry, I found that Major League Baseball, through using their data, does a better job of evaluating their employees in terms of looking at their skill sets instead of results than maybe the financial industry does.
Okay, so all right, let me put that to the test. The 2013 season, just around the corner, getting underway in terms of spring training. Opening day, 2 weeks away. Who's undervalued in your view?
I think the Tampa Bay Rays are undervalued and the Cleveland Indians are undervalued. I think those would be two great examples in the American League. And because they're undervalued, there should be somebody that's overvalued, and I think it's the Toronto Blue Jays. I think Toronto signed all these flashy free agents, and they've greatly improved themselves. But the underlying core, or the change from where they're starting from, I think they're vastly overvalued, and I think people are missing that it's the Tampa Bay Rays that has the best core talent.
All right, sticking your neck out with the prediction. Joe, great to have you on the program.
Maria, thank you for having me.
Thank you so much. Joe Peter joining us. Up next, we'll take a look at the news this upcoming week that will have an impact on the money. And then a summer of sweetness could be ahead for lovers of a certain snack cake, where you can find your Twinkie fix following one delicious deal. Back in a moment. Stay with us. For more on the money, go to our website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. Send me a tweet. Now, a look at the stories coming up in the week ahead that may move the markets and impact your money this upcoming week. Earnings reports are out from FedEx, General Mills, Nike, and Tiffany, among others. On Tuesday, we've got the housing starts report coming out, telling us how many residential units began construction last month. On Wednesday, the Federal Reserve's Open Market Committee will wrap up a two-day meeting with a press conference from Chairman Ben Bernanke. Thursday, realtors will report on existing homes sold last month. And then on Friday, the BlackBerry Z10 touchscreen smartphone will be available to U.S. consumers. And for dessert, Twinkies just never go bad. Bankrupt Hostess Brands has agreed to sell the iconic cream-filled confection. The $400 million-plus deal would put Twinkies, Ho-Hos, Dolly Madison Zingers, as well as 5 factories under the control of 2 private equity firms. The new owners, Apollo Global Management and Metropolis and Company, both have history with tasty turnarounds. Metropolis purchased Pabst Blue Ribbon in 2010. A bankruptcy judge is expected to approve this deal this week, meaning Twinkies could tackle store shelves by summertime. That'll do it for the show today. Thank you so much for being with me. My guest next week, Liz Ann Saunders, the Chief Investment Strategist at Charles Schwab. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you again next weekend.
Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
People who know BDO.